minutes before we start the webinar. Give some doctors more opportunity to join. Good morning, good afternoon. Welcome to today's Dental Commercial Real Estate webinar on negotiating or renegotiating the terms and rent in your dental office lease. My name is Lee Tesler. I'm one of the senior consultants at Cirrus. And today we're going to learn all about commercial real estate and the business side of dentistry and how important the dental office lease is to your business. So I think it's important to find out a little bit more about you yourselves, doctors, to see what stage you are at your career. You will see a poll going across the screen right now. If you could just fill in, tell me a little bit about where you are in your practice, whether you're starting a practice, adding a new location, renewing your lease, or you're looking to sell or transition out of your practice. If you could just click the poll, that would be most helpful. So I think it's important for you to know a little bit more about Cirrus and who we are and why we are here representing the dental community. Well, we are a healthcare and dental specialized tenant representation firm. We were founded in 1994 by dentists for dentists. We're actually celebrating our 25th anniversary, and we have negotiated since our inception over 10,000 dental and medical office leases. What makes us a niche business is that we have an in-house legal and leasing team, all comprised with real estate background in medical healthcare and attorneys and a consulting team. We annually represent 1,000 doctors throughout North America. We also deliver over 100 continuing education seminars annually, and I'm one of the key speakers at these events. And we also lecture at most of the major dental conventions, such as the Greater New York Dental Meeting, the Pacific Dental Conference, the Yankee Dental Conference, and the California Dental Association. We really work with dentists nationwide. So I took the opportunity to pull a few reports from some of the key markets. Here you can see Boston. If we look at the vacancies and the rental rates, the vacancies have been coming down and the rental rates going up. I think it's important for you as a whole to understand that although the rent and the financials is extremely important when it comes to your office lease, there is also a lot of other legal verbiage and provisions that we are going to discuss a little bit later on that are also extremely important. As we go on, you can see that Chicago, again, we see rents increasing while vacancy rates are going up. Also in Orlando, vacancy rates are starting to go up while rents are coming down here. And New York, which is a very hot market, so even when you can see some of the rents, some of the vacancy rates going up and down, the rents have stayed pretty in line, and they continue to be a very high market. In Toronto, again, rents continue to go up as vacancy rates go down, as real estate becomes a premium where people are looking for more space. And San Francisco, again, vacant since 2016, and the rental rates pretty much in line with the vacancy rates. So the purpose of today's webinar, the importance of the office lease agreements. So we really want to have a deeper dive into some of the legalized and verbiage. We'll also look at some of the key terms and conditions and some tips and tricks on how to get a successful outcome. My mission here today is not to make everyone expert, but my goal is to educate you on a complex topic and make sure you walk away realizing what a beneficial tenant you are, how everything is negotiable. So what is a lease? So this is one of the first questions that I ask at all of my continuing education seminars. What is a lease? What's the first thing that comes to mind? Well, I can tell you it's a check, and it's one of the most expensive checks you will ever write in your entire professional business career. If we just took an average space of 2,000 square foot, paying $30 per square foot, you're looking at $60,000 per annum. That is just the rent, the base rent. So an average dentist will stay at their space for over 26 years. So if you take that over 10 years, you're paying $600,000. Over 20 years, $1.2 million, and over 30 years, you will write a check for $1.8 million, and that does not include any additionals, any of your operational costs. So as you can tell, this is an extremely an important and a very expensive amount of money that you will sign when you do sign this lease. So why is the office lease so important? Well, your office location is the foundation of your practice. Your patients come to your location, to your community, and if you can't practice at your location, what do you have? It's also extremely expensive to enter into the business of dentistry. Most doctors who buy a practice, you could be looking at anywhere between $150 to $200 per square foot just to build out the practice, not including any of the equipment. So you can imagine the expense that goes into your practice. And it's very difficult and expensive and time-consuming to move. You are not an average tenant. You are not a nail salon. You're not a restaurant. You're not an office that can just simply pick up tools and move over the weekend. And also the lease is extremely important when it comes to the practice sale. If the lease is not structured correctly, then there can be extreme difficulties when it comes to selling your practice. So what should the office lease do for you? It should provide fair and affordable terms. So what do I mean by that? So many of you have what's called a triple net lease, where you're paying a base rent and you're also paying your CAM costs, common area and maintenance costs, additionals. So we need to make sure that you're not overpaying on your CAM costs, and then we need to take into account if you've had any tenant allowance improvement baked into the rental rates. There's no such thing as free money when it comes to landlords. We also want to have long-term stability and security. So what do I mean by this? Many of the leases and many of the negotiations that we're involved in at Cirrus, we like to implement a 10-year term with at least 2 5-year options. This gives you long-term predictability, also gives the landlord predictability, because like I said, when you have put that amount of money into your practice, whether you've acquired the practice or you've built out the practice, you want to make sure that you have a long-term lease and a long-term commitment so that you can't and not in a position, a vulnerable position where you could be forced to move or relocate if your lease is not structured correctly. We also want to minimize risk and exposure. So what do I mean by this? Many of you who have taken out a lease or bought a new practice may have a personal guarantee on the lease. So if you're just starting out and you do not have too many assets, too much capital, because you've got into come out of dental school and you've taken on quite a lot of risk and a lot of debt, then this is quite understandable for the landlord to want a personal guarantee. But many leases that I read, many doctors that I speak to who had a personal guarantee maybe 10, 20 years ago, have still got the personal guarantee in their lease. So we want to remove the personal guarantee, or at least limit some of the exposure, especially when you've been paying rent for a long period of time and you've proved to be a good tenant. We also want to maximize your flexibility. We talk about a right of first refusal. We also like to add what's called a death and disability clause, so that in the event, God forbid, something was to happen, whether you were to pass away or you were unable to practice wet finger dentistry because of an injury or an illness, a sickness, that your estate shouldn't be liable for the remaining term of the lease. When we negotiate any new leases, we make it abundantly clear, and we want to insert this death and disability clause. It's almost like a free insurance clause. That is something that we've made our name on. And also, the lease, you want it to enhance your ability to eventually sell your practice. Like I said, your office lease is the foundation of your practice. If you cannot sell, if you cannot assign over the lease to another potential buyer, then you can't sell your practice. So we will go into a little bit more detail a little bit further on. I can explain that in a bit more detail. So what are the three key sellable components of your practice? Equipment. Equipment is certainly one. We look at a depreciated value of the equipment in the office. We take into account some of your initial investment and what the present value is today. But what I will tell you, many doctors who have a practice valuation get hindered by outdated equipment. So I normally advise dentists that are in their last 5, 7 years of retirement, or maybe 10 years, to make sure that their equipment and their technology is up to date. Because when a new potential buyer looking at 2 or 3 practices is going to be more interested in the practice potentially with the newer technology and the newer equipment. What else is makes up the component of your selling your practice? Goodwill, patient. So this goodwill is a term that's loosely thrown around in the dentistry industry. So what does it actually mean? You know, the reality is you are, as each patient is worth on an annualized basis. It simply boils down to revenue. How often your patient comes into the office and how many costs per year or services are rendered. Now, as my previous slide, when I discussed outdated equipment, many doctors we speak to in the last sort of 5 years of their practice, when they're thinking about transitioning, they tend to slow down and they start to work 2 to 3 days a week, maybe spend 2 or 3 days of the other on the golf course. And this can certainly significantly decrease production. When it comes to practice valuations, we look at equipment, we look at goodwill, and we look at the revenue that has been produced over the last 3 years of the practice. So it's very important to make sure that the revenue is kept as high as possible in those last 3-4 years, because that is how you're going to maximize the value of your practice. And finally, last but not least, the lease is actually the most important factor contributing to the valuation of your office lease agreement. The lease can have up to 100% impact on the valuation of the practice. If you cannot transfer the lease, you cannot sell the practice. The terms and conditions of the lease have a significant impact on the sale of the practice. We see the lease impacting over 20% of practices, with 54% leaving money on the table because of a lease that's not well structured. So what in your lease? There are dozens of problematic provisions in the lease, but due to the time constraints, I'm going to take you through a few provisions. So the option to renew provision. This is found in 90% of leases. If you have an existing lease, or if you've taken on a lease, you will know that the initial term, normally there will be some sort of option to renew in the lease. So this is a provision, like I said, that's found in 90% of leases. So if you just take a minute to have a look through the lease, see if there's any red flags or anything that jumps up to your attention, and then I will go through and explain. Okay, so if you've had a look, let's have a look at some of the provisions and some of the red flags that we see on a daily basis. So the first line and the first thing that we are drawn to our attention, it says, provided that Dr. Joe Black shall remain as the tenant. So what this means is that Joe Black being the tenant, the option to renew is only eligible for Dr. Joe Black. It is non-transferable. So if the lease was to be transferred and you were selling your practice and you said, I've got 3-4 years to term left remaining plus 2 5-year options, they actually wouldn't be eligible for the new purchasing doctor, because they are specifically limited to Dr. Joe Black. So if we look at the next red flag, as it says, if the tenant duly and regularly paid its rent and performed its covenants and obligations under the lease and has not been in default. Now, many of you will think default, that comes to, have I paid my rent every month? I've never missed a payment. Well, I'll give you an example. We had a client in Ontario. She had paid her rent and been a wonderful tenant. She had been at the space for nearly 20 years, and she was just coming up for her renewal. She expressed her option to renew in writing. She gave the landlord enough notice, and the landlord said that, unfortunately, you are not able to renew the terms of the option because you've been in default. Now, she couldn't understand. She'd always paid her rent. She had been a great tenant, and she really didn't have any idea why she wasn't able to express her option. When we were retained by this doctor and we dug a little bit deeper, what we found out that the doctor was in default of her lease purely because of her business hours, because she was open Monday to Thursday and she wasn't open on a Friday, and the landlord had found her in default of her lease. Now you're probably wondering, well, why are they going out of their way to remove this tenant who's always paid her rent, never ever caused a problem? Well, the answer really comes in one word, and that word is Starbucks. Starbucks wanted the space, beautiful on the retail plaza, corner space, and they negotiated higher rent for a longer term. And the landlord, being very savvy, wanted to get rid of our doctor. They found this default provision that she had been in default purely because of her business hours. And there was nothing she could do because it was written in the lease. So if we look at the next red flag, it says any such renewal shall be on the landlord's then current standard form lease. So any conditions, anything that you've had in the existing lease and you've now renewed the lease, you've expressed your option, now saying that the landlord can revert back to the current standard form lease, which means he could add any condition, a redevelopment clause, a relocation clause. We must have it specifically that the renewal stays on the existing lease, not the landlord's current standard form lease. What else do we see in this one paragraph? It says, in no event shall it be less than the rent paid in the last year of the original term. We had a doctor in Miami who taken out their lease just over 10 years ago, right at the height of the market in the real estate and the economy, and they paid extremely high rents at the time. As we know, in 2008, when we had a recession, a global recession, that the rents were extremely high. So basically what it's saying here is it doesn't matter what the market conditions are, what market rates are at the time of renewal. It says in no event shall the rent be less than it was in the last year of the original term. So again, this is a red flag. And then finally, as you can see here, if the rent is determined by arbitration and you can't agree fair market value, it can be based on market rent for renewing tenants in the building. So we have no idea if a Starbucks have negotiated, for example, in your space, and they're paying extremely higher rents for the space that they're in. There could be somebody else that has tenant allowance improvements in their rent. We do not want it to be based on market rents for renewing tenants in the building, because we shouldn't necessarily be paying what Starbucks or someone else is paying when we don't know what's actually in their financials and what's included. So as you can see, this is just one provision, and in that one provision we have found 5 red flags. Just one provision, and you can see that any of these any of these statements that are in the lease can cause extreme amount of stress, and eventually, or could force you to actually relocate your practice, move your practice. So we want to make sure that these are extremely tight and structured correctly, dental specific. So the next provision that I want to talk about, again, this is found in 75% of dental leases, is the assignment clause. Essentially, the assignment provision allows you to assign your practice to another potential buyer. You have to get permission from the landlord to assign the lease to the potential purchaser. So you take a minute, have a look at this provision, and then we will go through and have a look at some red flags that we see in 75% of dental leases that we review on a daily basis. Okay, so now you've had extreme fun reading the assignment clause. Let's have a look at the first red flag that we see here. So the first problem, as we see, is the landlord has to have consent. You have to have consent from the landlord to assign the lease to another buyer. And it says also that it could be reasonable request. I mean, what is reasonable or what is unreasonable consent? So if we look at provision number 2, the landlord shall have the option to 1, approve the tenant's request to sign the lease or sublet the premises. 2, can decline the tenant's request to assign the lease. And 3, he can terminate the lease agreement upon the effective date such proposed assignment or sublet. So just by simply asking the landlord for permission to assign the lease, he could give you an and say, 1, just for asking, I'm going to terminate the lease. 2, he could just simply decline your request, or he could actually raise rents. So if you see, as we continue down, the landlord has the right to revise the minimum rent to be paid during the remainder of the term and be greater of the current market rent for the lease premises of 15% than the greater current rent. You have just agreed the sale of your practice. You have a buyer and you are literally just dotting the I's and crossing the T's. And the last thing that you need, and you realize, is I need to get the lease assigned. I need the landlord's permission. When you approach the landlord, he knows that as a dentist, there is a lot of value and going to be changing hands when it comes to selling a practice. And he wants some piece of the pie because he knows that there's a lot of money at stake and a lot of money changing hands. And just by asking to assign the lease, as we look at this provision, he could raise the rates by 15%. So if you've agreed a deal with a a new young associate or a new buyer, and then suddenly he gets lumbered with a 15% rent increase, he may not be able to afford to purchase the practice. Or on another case, he's certainly going to reduce the offer by 15%. So furthermore, as we see here, should the tenant receive from the assignee or subtenant any rental income, cash goods, or any form of consideration in connection with payable to the landlord, the difference between the annual rental rate and such rental income, cash goods, or other consideration shall be paid directly to the landlord. So you have sweated blood and tears for 30 years. You've been a great dentist in your community. And then when it comes to your retirement and you're selling the practice, the landlord wants some proceeds of the sale. Now, you are probably screaming at your computer screens as I'm reading this. But it is written. It is written in black and white, and we've seen it in many leases that we review. And you're probably wondering, well, how can the landlord be entitled to any of my proceeds as a sale? And his argument is, well, you've been at my location, you've been in my space, the foundation of your practice, and I've helped you with my location get to where you are today. Do not let landlords take any of your hard-earned money. And finally, on the last paragraph, what I call the kicker, you finally agreed with the landlord for him to sign the lease over to the potential buyer. And it says, notwithstanding the landlord's consent to any assignment or subletting, the tenant shall not be released from its obligations under the lease and shall remain liable for any failure of the tenant or its assignees or subtenants to observe each and every covenant of the lease. We call this continuing liability. I had a doctor in Florida who retired and was enjoying his retirement 2 years after he sold his practice. He was on the golf course enjoying his retirement, and he had a call from a landlord to say that the buyer had defaulted on the loan, on the lease, had declared bankrupt because he took on too much debt. He bought an expensive house, he bought an expensive car. Now 2 years later, when the landlord's looking to find a way to reimburse himself with the rent, because of this one clause, one provision, he's now enabled to come to you 2 years after selling your practice. Now, do you want to be going back to work for the remaining 8 years of the term of the lease? I don't think you do. So again, these are just two provisions that we've gone through today. And as you can see in the assignment provision, there are 5 or 6 clauses that can cost anywhere between $250,000 to $500,000 if not structured, if not written dental specific, if not favorable for the tenant, not for the landlord. You are an extremely valuable tenant, and you should not be leaving any money on the table for the landlord. So, as I said, as I mentioned earlier, due to the interest of time, we were only able to go through 2 provisions in details, but as you can see, there are a number of other traps in the office lease. For example, a demolition clause, a relocation clause. You know, we see a lot of the demolition clause in gentrifying areas where the landlord wants to have the ability to demolish the building and in the interest, and a relocation. These are red flags, and this can cause a problem when getting finance, when selling your practice. So these are just some of the other traps. As I said earlier, the death and disability clause. This is something that we like to add in every new negotiation that we are involved in. So how do doctors get fooled? Very simple financials, because the landlord may say, you know, we can reduce your rent by $1 per square foot, and you sign a 3-page amendment. You don't look at it correctly, and the landlord's suddenly inserted a demolition or a relocation clause in your lease amending agreement. They do this every day. This is their job. This is what they do. And this is how a lot of doctors can get fooled. As you can see from our next slide, what's called the tenant lease cycle. This slide was actually pulled from a landlord conference. And this shows exactly the leverage that the landlord is looking to avoid, where we are telling all of our doctors that the ideal time to start negotiations is 24 months before expiration. Because as you know from what we've talked about earlier, if there is a problem, if there is an issue that may need to explore relocating, it takes at least 12 months to 18 months to relocate a practice. We want to give ourselves the best opportunity and give ourselves the best leverage when it comes to negotiation. You can see here that when there's 12 months to remain, start to see the landlord hoping, and will not probably tell you when your option, when the date that comes for you to express your option, you won't be reminded by the landlord. He is hoping that he can take this date down to as close as possible to the expiry date, because he knows that with 6 months to go, or no option, if you've missed your option deadline date, that really you aren't in a position to move. You need to practice. You haven't got the time to move. And then the leverage is all at the landlord. The landlord can put the rent up. The landlord can do a number of things. It is very important and critical for you to know all relevant dates when your lease is expiring, when your option deadline date normally could be 6 months to 9 months before expiry, and you have to give the landlord notice in writing, not verbally. If you pass him in the corridor and say, yeah, I'm happy to stay, no problem, has to be in writing. Please make sure you know exactly when these dates are. Really important that you start the negotiation period at least 24 months before the expiry date of your lease. So, out of Cirrus, how have we been so successful for the last 25 years negotiating thousands of leases all across North America, be successful in getting really, really good outcomes and good wins for dentists? So we have done this regularly. We know exactly what we're doing. So the first thing that we do is we want to gather all the documentation. We get a copy of your executed lease, any riders, any exhibits, any addendums, any amendments, and it has to make sure that it's signed and countersigned. Basically, we gather any information pertaining to the lease. It's amazing how many doctors we speak to don't have a hard copy or a soft copy, and they're not 100% sure where it is. And the first thing they say to me is, I'll speak to the landlord, I'll get a copy from the landlord. Already, you're behind the goal line. you're already reaching out to the landlord for documentation. Please make sure that you have a soft or a hard copy available, signed and countersigned. So what is the next stage of the Cirrus process? So what we do is we would identify your practice and career goals, how long you've been practicing for, whether you're planning expansions or you've been involved in multiple practices. We really want to get a good sense of where you are today and where you want to be in the future so that we can align the lease to this. So once we get the documentation in and we have now got a good understanding about where you are in your practice career, we will go through every document with a fine-tooth comb and we will see what commitments, what obligations, and any potential traps and liabilities that you have already in the lease. So we would prepare some market research, understand what your rent is compared to other tenants in your area. So over the last 25 years, we've worked with hundreds of dentists and landlords, and we've built up a significant database of rental rates. So we have a really good sense of the marketplace. We have access to 95 billion of square foot data from real estate partners and software companies such as CoStar that help pull these reports. So if anybody wants a building report of their current location, feel free to ask me or email me after the webinar has finished. So we've now gathered all the documentation, we've identified your practice and career goals, we've reviewed the office lease risk, and we've prepared market research and intelligence. But what haven't we done at this stage? What haven't we done? We've spent this time doing a lot of due diligence. We haven't reached out to the landlord. We've taken all these steps and we haven't even had initial contact with the landlord. Why? Because we've been very successful with this strategy. It is a choreographed game of chess. And we've been very successful with this strategy. So please don't pick up your phone or email your landlord after this webinar saying, you know, I need to amend my assignment clause, I want to lower my rental rates. There is a very significant way that we've been successful with our strategy over the period of time. So once we've developed an outcome and a strategy, then we will pick up the phone and we will start negotiating the financial economics. The value as a tenant, what you bring to the bottom line. Because that's what they really care about, your rent roll. So we would spend 15 to 20 hours back and forth negotiating the financials. We would then move on to the lease and negotiation on the legal terms and provisions. Very often we're dealing with their attorney and not necessarily the landlord or the property manager. We're going back and forth redlining to get the verbiage aligned with your career and what we're trying to achieve. So now that we've gone through the negotiating, the financials and the legal terms, there's one final thing that gets overlooked, and that's the final execution of the lease. So we want to make sure that all the financial and legal negotiations that we've agreed and are fully written in the lease are actually the final executed lease document that you sign. I can't tell you how many times we've gone through a process, we've negotiated fair financial terms, we've got some really good wins when it comes to removing some of the clauses and the assignment language, personal guarantees, relocation, and then the tenant gets the final executed lease, and the landlord has made some changes or added in something. So we want to make sure this last final executed document that we sign is exactly what we've agreed. And there you can see how we win negotiations by being very tactical and very thorough every step of the way. We have a very good relationship and a very good name in the market across North America when it comes to negotiating leases. And at the end of the day, your best work is chairside. So what we have is if you can see on your screens, is a critical dates and risk analysis. Here what we do, we would spend 3 to 4 hours analyzing your lease for traps. We would schedule a call where we go over your current plan, any advice on any hidden traps that we see, anything uncovered in the lease, what the ideal should look like for you on how to negotiate a tactical plan and strategy. This is a $1,495 cost, but because you have joined me today on my webinar, we're going to offer this complimentary service. So this is on a first come, first served basis. And if you are interested in the complimentary lease review, you will need to email me. As you can see my email, ltesla@cirrusconsultinggroup.com, or you can telephone me 1-866-739-9075, extension 3246. Again, this is on a first come, first served basis. So the first 10 people who show interest in this complimentary lease review, we will gather your documents, and like I said, we will go through, we will spend 3 to 4 hours analyzing your lease for any traps, and we will go on a scheduled call to cover your vision and look at exactly how your lease should look and make sure that we negotiate an effective and tactical plan going forward, and that the landlord is unable to take advantage of you as a tenant in the future. Thank you. That concludes today's webinar. I will be available on that telephone number as you see on your screens, via email. If you have any questions, please don't hesitate to reach out to me. And again, the complimentary lease review is a very valuable service where you have a professional firm like ourselves to review your lease. Please take advantage of this offer. Thank you very much.